This is a download from BFM 89.9, the business station.
Good morning, Dodge. Now, the recent slew of big-name bearish forecasts have been dominating headlines. Some of the market's biggest names are in the sell everything camp. We've got George Soros, Jeff Gundlach, Bill Gross, Carl Icahn. Should investors be paying any attention to these warnings?
Yes, good morning, Melissa. Yes, we should be paying attention to it. Not that we would act upon it, but yes, there is a reason for it. But the market is not ready to turn over. There is little evidence of deteriorating breadth. There are signs of relative strength in terms of stocks making new 52-week highs. So there's no reason to act upon the concern until we see an increase in the selling pressure. Now, when I talk about selling pressure, I'm talking about every individual stock. Stock gets a trade on the stock either goes on the bid or the offered. If it goes through on the offered, that's basically a buy. If it goes through on the bid, it's a sell. So technology has allowed us to measure the force of moves in stocks. So even if a stock goes up, if it trades more on the bid, there is selling pressure. At this point, selling pressure remains subdued. And if it remains subdued during any further weakness, the probabilities would then call for a new buying opportunity when we get down to an oversold position. So I think it's premature to be worried about the big name bearish forecast, but I do think we have to be wary of it, even as the market goes to new highs.
Well, the argument to follow their warnings often includes, signals like equity market funds seeing their largest inflows of investor cash. So it looks like investors are yanking money from U.S.-focused stocks, shifting it overseas. There's also, the argument that these high-profile hedge fund and long biased managers, what is it that they know? Maybe they know something that investors don't, that the market doesn't.
Well, Melissa, I don't think it's that the market doesn't know. It's that the market hasn't accepted or appreciated. I do believe that at some point we do need to pull back, and it will be healthy as opposed to being the end of the world. I do suspect that it will come, and I do suspect it will come at a time when there's a greater optimism and a greater overbuying that we haven't seen that at this point. Right now, there is very concentrated buying. It's beginning to expand over the larger market, but it's still really focused on a very small group of it, and it's hiding the fact that there is some negative questions in the market, even though the major averages are going to new highs. So at this point, it would be premature, and most of the hedge funds would not be able to go against the market move because they would lose. They would lose relative to the rest of the other performance. So at this point, we're still seeing a great deal of optimism. When it gets to be excessive and it begins to breed selling pressure, and that's really the key to the market moving down, that's when it would be time to rethink the strategy.
So what about you right now, Dodge? Are you remaining a bull in the face of all this bearishness?
We are long. We do not have any short positions. We have exited our gold position because gold would be more of a bearish call than the market is calling for now. We're very close to increasing, but we're waiting for the market to overcome some of the hurdles on the upside. Yes, we're at new highs, but given the fact, like today, Melissa, oil turned lower, and because of that, I think you're going to see that there's less optimism to be buying. There's a little weakness in the move to the upside. So we would be buyers on the pullback and would be watching for an increase in the selling pressure when the pullback occurs rather than buying a breakout.
Well, moving on to Donald Trump. Well, he's laid out his economic plan. He's vowed to renegotiate trade deals and aggressively lower taxes. He's in fact promised that no American business will pay more than 50% of their profits in taxes. What are your thoughts, Dodge, on Donald Trump's economic plans? Will it be able to kickstart the U.S. economy?
Oh, Melissa, this is such a big topic over here. The politics are really ruling what's going on in the news. For the first time, Trump is offering a detailed policy proposal that we rarely hear during his typical stump speeches during this campaign season that we're now going through. There are some things, he's aligning himself with House Speaker Paul Ryan. That's a very good thing. Yes, he wants to reduce tax rates for most Americans. That's good. He wants to simplify the tax code. That's good. He's calling for a moratorium on government regulations, and I have to tell you, Melissa, that would be huge. Whether it actually gets done or not, the fact that he's talking about it, he is really portraying the disruptor in this whole process. Now, disruptors are succeeding in changing the way we live, shop, think. They've been very good in other segments, so why not in politics? Yes, he has had to spend a lot of time in reacting to some of the negative PR about what he has come out and how he said it, yes. But he's beginning now to focus more on what's important about the economy and offering suggestions. Of particular interest, I think, is the fact that he's talking about getting tougher with China on trade, preventing the theft of U.S. intellectual property. That has been a big concern, and there's been very little progress made. He's talking about imposing a huge tariff on China inputs and versus a more traditional but a very slower process of moving towards diplomacy. We've seen that. It really hasn't worked. So whether or not his economic policies end up, if he is the president, end up the way he's talking about them, he is portraying himself, and he is a disruptor. It has, and it is really rethinking and helping us come up with new ways and perhaps not falling into the old ways and not making any progress. So I do like what he is saying about his economic policies. I do think that there is real improvement there. I do think that a lot of them can be done, and I think it would be good for our economy.
Well, Dodge, so say his plan actually comes to pass. Are there any winners to this plan? I mean, how can investors position themselves to benefit if indeed he becomes a president?
At this point, it is so iffy as to who is actually going to be president. There's not much positioning to be done at this point. So we're not planning to make any kind of investments now at this point. Also, you will see that he will change what ultimately occurs with his economic policy will probably be different than what he is portraying now. We don't know how, but we have seen that he's adapted himself, as a businessman does, to the changing attendant circumstances. So what we like about him is his ability to bring a newness of vision and breadth into the market as opposed to what the actual policies are. I suspect that being more involved with U.S. Economy and U.S. growth companies will, because I do believe that companies will be incentivized to bring their manufacturing back to the U.S. I do think that will be one of the offshoots of his economic policy should he become president. So those types of companies probably will benefit, but we're not seeing that being built into the market performance at this point.
Okay, still early days at the moment. Just very quickly, Dodge, it's been a couple of bad days for the airline business. Delta delays we've seen the past couple of days, Airbus investigations in the UK. What are your thoughts on airline stocks, Dodge?
Okay, airline stocks. Delta, computer system crash after a power failure. Delta has done a lot of right things. They apologized. They've offered refunds. They brought their systems back online very quickly. They started resuming flights within a few hours. I don't think it's a long-term negative. I do think that airlines will be viewed in response to their ability to react to these negatives. Several outages have occurred in U.S. airlines, so the airlines are vulnerable to information technology problems. We're going to be watching that, but that's not long-term. The Boeing versus the Airbus, that is much bigger. We do expect to see a surge in economic growth that has made emerging markets a growing important source of aircraft orders, and the concern that has now arisen with Airbus, I think that's going to be a big disruptor with regard to future growth of the airline business. So we're going to be watching that. I do think emerging markets are going to be the beneficiary to what's happening now in terms of regulation.
Thanks so much for your time. That was Dodge Dorland, Chief Investment Officer of Landor and Fuest Capital Managers in New York.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.